Okay, so I'm gonna get into daily bias today. This is gonna be a short video just because the way that I use daily bias, it's really simple. I don't like having this super complicated way of looking at daily bias. I think simplicity in trading is really the best thing you can do for your trading. The more you complicate your trading, the harder it is for you, the harder it is for you to see everything. So the more you can simplify it, the better. So the first part of understanding daily bias is just understanding what you need to look for inside of a candle. Okay, so when we're looking for daily bias, we're mainly looking at our higher time frame candles. You're not going to look for daily bias looking at the hourly. You're going to look for daily bias looking at the daily, maybe the weekly, maybe even the monthly. But there are four things that you need to look at inside of a candle, which is going to be the high, the low, the open, and the close. Now for daily bias, we want to mainly focus on the close and the highs and the lows of the candles. The close of a candle is the most important part of a candle when it comes to understanding where price wants to go next. So for example, if we see that the high of the daily candle came above previous day high, but the candle closes below previous day high, we can anticipate price to be bearish. As you can see in this example, we came above previous day high, tapped a high time frame PD array, but we closed below, so our next day target could potentially be previous day low. Now this is, like I said, it's an extremely simple way to go about daily bias, but it works. So understanding the market, okay? So the next step of getting good at daily bias is you need to understand how the market moves. So first of all, the market cannot reverse without a swing point, okay? Secondly, the market draws towards PD arrays. The PD array can be a high time frame fair value gap, a high time frame liquidity pool, whatever you really look for. Because if the market is expanding, there is a target for the market. Now, sometimes we're not going to know the exact target. For example, our target could be a PD array right here, but market wants to go to a PD array up here. So there's going to be times where you don't get the exact target correct, but when we're expanding, it's pretty safe to assume that there is some external PD array that we are drawing towards. So if market retraces into a PD array and forms a swing point, we can assume price is going to continue that reversal into the next day. So you can see here, like I said, we close below previous day high, so we can target previous day low. We have a swing point, high time frame PD array, and we take out previous day low and we're expanding bearish. Now, not every swing point is valid. For me personally, the only way I consider it a swing point is if we have some sort of point of interest. So it has to be either liquidity for me, a fair value gap, or a high time frame external S&T. Now the next step is top-down analysis. So some traders think that if they have a bias on the weekly time frame, they have to get the entry on that time frame. If you have a long-term bias on a higher time frame, you can catch multiple trades on lower time frames. So for example, if your entry model may only form once on the weekly, but on the daily it forms 4 times, and on the 4 hour it presents itself, let's just say 7 times. So when I have a weekly or a monthly bias, I usually take multiple trades throughout the week or throughout the month that align with my external draw. And you can see here in the example, if you look on the weekly, we get this weekly CISD to the upside after bouncing off a weekly PD array. So we can assume that our target is the high of this range. And if you look at the daily time frame, you can see that there are multiple setups that you could possibly take inside of this weekly range. This is our weekly CISD, and you can just see here, daily fair value gap, there's just multiple setups that you can take. Now, how do you form a narrative? Because daily bias is only going to get you so far if you can't actually form a narrative to take a trade to go to your daily bias. So for a narrative, it's super similar to your daily bias. And what I mean by that is when you're getting your daily bias, you're looking at price, for example, and you're seeing that price is expanding bullish. So what you're looking for is you're looking for external ranges of liquidity, external fair value gaps, whatever, for your potential target. Now, if you're trying to trade the expansion, then for your narrative, all you're going to look for is internal range liquidity to help you or to respect price to continue that expansion towards external range liquidity. So for example, in this example here, you can see that our let's just say this is our higher time frame draw. We have this fair value gap inside this range, so this is our internal range of liquidity. And you can see we fill the fair value gap, we expand, right? So it doesn't really matter what your area is that you mark out. It really just depends on what you like to trade. But for me, I like to use fair value gaps and relevant swing points. So because if market is truly expanding, it's going to respect all of these confluences without giving you a deep retracement. So yeah, that's the end. So I'm just gonna go ahead and get into a short example. We're just gonna do this on gold. We're gonna go based off just daily closes, and we're just gonna see how it would pan out if we want to take a daily bias. So right here, we can see that we are having a strong bearish downtrend, and we can see that we close below previous day low. So my target for this day is gonna be this new previous day low. Okay, and we can see that we took that. Another strong bearish close, so my target is once again going to be previous day low. Okay, now, what did we do? We took out this daily liquidity, and we also filled this daily fair value gap. But if you look at the daily close, we still close below the previous low. So for me, with this wick, this is a day that I would just let price give me direction. I would not trade this day. I would want to see the next daily close. So if we go to the next daily close, we can see that we didn't take out previous day high or previous day low. So once again, what am I going to do? I'm going to wait for the next daily close. All right, next close, what do we get? A strong bullish expansion off of these points of interest, inverting this daily fair value gap. So what is my target? Previous day high, boom. Once again, strong close. What's my target? Previous day high. There we go. Once again, going to target previous day high. Once again, damn. Okay, target previous day high again. Okay, now you can see that we took previous day high, so our target got hit, but what did we do? Filled this daily fair value gap, and we swept this daily liquidity, right? And what did we get? We got a swing point with a strong bearish close, so we can assume that market is trying to reverse, at least for the short term. Obviously, if we want to look at if it's reversing long term, we'd have to scale up to higher time frames. But keep it super simple. Where's my target? Previous day low. We can see it got hit. Now what happens? We sweep previous day low, but we close above. So where's my target going to be? Previous day high. Okay, we hit that. Now, like I said, when we have a strong or a big wick like this, I like to sit out on the market. And we're also filling this daily fair value gap. So I would more than likely sit out in this situation, but if I had to have a target based off this strong rejection, I would be targeting previous day low. And we can see we did hit previous day low, but we also hit previous day high, but we didn't get a closure above, like we got a closure above previous day low, but we also closed it below previous day high. So this is another day where I'm not exactly sure what market wants to do, so I'm just going to sit out. If we can see here, we are still in this range. We didn't take previous day high or previous day low, so I'm waiting for the next daily candle. We swept previous day high, but closed below, so I can target previous day low. We take it, but once again, we do not get a strong close. So I'm letting the next daily close. There we go. So now I'm targeting previous day low once again. We take that, but we get a strong close above. This does have a big wick, but we had a strong close above, and what did we do? We took out this daily range of liquidity, and we're still respecting this daily daily fair value gap. So I can target previous day high, smacks it. Once again, we get a strong close above previous day high, so I can target previous day high once again. There we go. We are getting expansion. Is my mic working? Yeah, okay. Sorry. This mic is not very good. I need to get a new one. But, okay. So here, what do we get? Strong sweep, strong close. And then you get the point. So you can really just use this concept and it's really good. It's super simple and it works most of the time. Obviously, it's not going to work every single time. I mean, I'm sure if we keep going, we can find an example where it doesn't work. Yeah, like right here, for example. I mean, this is an example where it didn't work, but I mean, we had so many examples where it did. We had a strong close above, we closed above this, daily CISD, so we would have targeted previous day high. And obviously, our target would not have gotten hit. Maybe we had an SMT with silver, maybe something like that. Always possible. But yeah, that's just a super simple way of having daily bias. So yeah, super simple video. Daily bias is really not a hard concept. Um, just look at the daily time frame, look at the daily close. If it's not clear on what the market wants to do, then just sit out. There's nothing wrong with that. Yeah, if you guys have any questions, just let me know.